All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market near its lows on the day, a little bit off its lows last I saw, but it's definitely one where the market had a little bit of a shock here today to its system. We saw here on the 24th, we saw the market vibe switch and go bearish, and path of least resistance on the market ever since has been to make a new leg lower, and we're at a new low here, a new multi-month low here for the market. Market vibe hit -10 here today. Now -10 is oversold. It is incredibly oversold, but it's one where we have seen. We don't have to look back too far to see a period of time where the market vibe stayed this oversold or at -10 for a long period of time, and we'll see what happens. Today I was asked what do I think is going to happen, and the reality is I don't know. I don't have a crystal ball. There are a whole lot of different things that could happen, that could take place, right? Most people in their market models were not pricing in a U.S.-Mexico trade war, coming up or something of that nature. So, the market's constantly hit with new things and kind of new information. But what do we know about the metrics right now? They're strongly bearish. And when they're like this, the chance of falling is only even greater. And yes, we could see a snapback, right? If we see a snapback, a lot of times those hard, fast snapbacks, well, yeah, you miss the bottom, but man, there's a long way to go to the upside. So there's zero need to kind of go in and say, well, I'm just going to pick the bottom right here because blah, blah, blah. So anyway, that's kind of where the market vibe sits here today, and the market internals, just across the board, the bears have complete control. They have absolute complete control. They continue to push the bullish percent index down. You'll notice it's nowhere near some of the levels seen in October, November, December, but they still have full directional control of that. The volumes are strongly in the bears' control here, and if we come in and we look at just sector performances, right? What sectors are on the move, what sectors are, holding up or selling off. We can look at it on a day-to-day basis, right? And we can see energy down, consumer staples down, right? You go, wait, staples are the big loser today? Well, yeah. Some of their costs are going to go up here with the announcement here overnight. But if we just look over the past month, right, and you look at the performance of sectors, technology, materials, energy, consumer discretionary, industrials, financials. I mean, this is about as bearish of a sector stack as we've seen in the market in a very long time, over the course of a 1 month period. Real estate's up, utilities are flat, healthcare's down a little bit, right? It needed the whole J&J opioid debacle to actually go red, because this is still one of the high growth areas. But outside of that, the more economically sensitive sectors absolutely getting punished pretty much since the beginning of May, when U.S. President Trump put that tweet out about things with China, and trade talks basically being called off, and we have seen the market. It hasn't been an all day, every day sell or anything like that, but we have seen the market, just really, path of least resistance down and carry on forward there. We've moved from chop to drop, and, with the market vibe where it is, we are definitely in that, drop scenario here today. All right, now for the challenge, there are no new signals on the board here this afternoon. In fact, it's the same signals that we saw this morning as far as the 3-7 crossovers, but It is we're not seeing any new signals come in this afternoon. But we do have a position on the board, and looks like we'll have to make a decision here with it. And it's gold GLD 123.20 is its current stock price, right? And the profit levels 123.19. Now, before I jumped on video, I knew this was coming, so I just copied the two lines, and you'll notice that I just split the options. When we get into a profit-taking scenario, right, it's one of those where we can do it a couple ways. We can just trim options off, or we can take the whole position off and just take and put 60% of that into a different option. And that is something that's left to my discretion based on the risk reward and everything else there with it. With this, I'm just going to pull 3 contracts off. That's all I'm going to do here. So we'll pull about 40% off. I know it's not exact, but the option's going for 310 to 320, and I'm going to create a closing order here and just pull off 3 contracts. All right, so that's pulling about $930 out of the trade. I'm just going to do a market order, and it's filled at 316. My market order filled at 316. So let me just make sure the alert goes out there. But out of 3 contracts at 316. Just make sure. Whoops. Okay. And there we go. All right. So the alert should be out. And so let's go and update. So this means what? That on this trade up here, it's closed out. 5:31 p.m. 316 is the close price, and the trade is closed. And on those 3 contracts, we managed $340 worth of a gain. Now that leaves us in the other 4 contracts here. And this is important because now we have to take and readjust our levels. So the entry price or the level price here for GLD, right, is 123.20. So we're going to adjust that to 123.20. Our ATR has changed here as well. If we come into gold, today's move, because it's more than 2 ATRs here today, or 2 average true ranges, it changes the ATR, and the ATR is now 84 cents. So we're going to come in here and adjust the ATR, which is going to adjust our new stock exit level, our new profit level, and we'll be able to run here with those. Okay. And let's see, it looks like yesterday I changed the wrong price here, so let me just adjust that here. All right. Now, our auto exit date, right, it's going to change here, right? So our entry date on this is 5:31, right? This is considered kind of a new entry, but 5:31 p.m. I know we're not buying it, but now 6:05 p.m. is the exit, and 6:07 p.m. is the profitable exit. So it is looked at as a kind of a new trade here, and we have the option entry price here associated with that, but I don't have the category in this. I'll adjust that this weekend. But where we get the correct price in here, I'll just put it in the trade exit date right here. But it's going for 316 right now. So gain loss, we're going to base it on the stock price anyway. So we don't have to have the option price in there. But there we are. Okay, there we are. Pretty simple. Pretty straightforward, pretty easy. Nothing too dramatic. We're not looking at the chart and going, well, what does this mean? And it pulled back 20 cents. So what about this level? And what about that level? And, well, wait a minute, gold went up. And what about the dollar? And, well, what about gold miners? And what about jewelry sales in India? And all the nonsense, right? all the nonsense. We have the odds in our favor. We get the signal. We run with it. We know the times when, the signals are either going to come in for an entry or an exit. We know the parameters for an entry and an exit, and we run with that, and leave the top picking and the bottom picking to to others, right? But anyway, there we are with the challenge, and that should put the challenge just shy of 5,000, yeah, at 48.79. So we're just shy of 5,000 here on the challenge. So it's admittedly been a slow start in terms of the number of signals. It's been kind of a slow start in the performance of the signals since the first three were all time stops, right? We never hit the profit targets on them. We just hit the time stops on them. But GLD here, we hit the profit target there on it, and off and rolling here. With that, we still have the other four contracts in play here with that, and about $1,260 exposure in it. So our exposure went down a little bit from yesterday, but anyway, all right, there we are. No new signal to adjust to or to go in and make a trade on. I kind of thought Facebook would trigger on the downside, but it didn't. So yeah, nothing to go and jump into here. Okay. Please keep in mind. The challenge in the trade signals. They're not looking at anything about what's this stock going to do tomorrow. Is this stock going to go up or down from here? They are looking for, does this stock have a significant chance to go on a significant trend based on recent consolidation? And that's what it's looking for. And so it's we're going to have periods where we're going to have a ton of signals come in, and we're not going to be able to trade them all. Right? We're going to have signals come in like in Amazon where the signal comes in and they went up next day. That's what the algorithm is looking for. And, really, I can't stress it enough. It has nothing to do with the news headlines. 400. We're going to exit the week at dump in the challenge with the two trades. So I'll take that and, go forward here with it. All right. As I thought about what to kind of say about the market and going into the close here today and last day of a new month, I kind of looked at my notes where I typically will jot down different things and different ideas. My notes are pretty blank today. They are pretty darn blank today. I don't have a whole lot. I don't have a whole lot where I look at and go, wow, this is blah, blah, blah because of blah, blah, blah. Or, man, this is something that's, going to matter or change or alter. That terrible. And what do you do here? And where's this going to go? And, what about interest rates? And what about the, President Trump's Twitter account and, the Chinese media? And there's all that stuff. But we looked this week at the known variables that are out there. And the high number of known variables. And yes, each and every day new things can come in and they can change it. But we are in a summertime chop. That's the norm, is chop. We are in a bearish market vibe, which suggests that chop is going to go lower. We saw some things here this week on Wednesday where some short sellers, kind of popping out of some things. But we never saw any confirmation that they were turning around and jumping in long on other things. So, just really, a little bit of a sign, but no real confirmation there to it. And really, that's what the market is going into the weekend. It's a market where, the bears have control. The choppiness is high. The movements are going to be, relatively higher. Options are a little bit more expensive. They're not ridiculous. And one where, look, you have to go out. You have to assess your risk reward on any setup, just like you would on any given market. It's not like we can look at this market and go, wow, this market is just remarkably different from any other market over the last, 20 years. And, yeah, we'll go through flatter periods and choppier periods. And right now we're in a choppier period that appears to be getting actually more choppy this week than less choppy. But those choppy periods, normally path of least resistance is lower. As we go into next week, we're going to start to see a little bit more economic data. We're going to get into a time of the year that's a little bit different. And let's come into the seasonality here of this. And let's see if I can find that. Let's just come in seasonality of the S&P, right? Let's just go over the last 20 years. And here we are seasonally. May historically has been a pretty good month. It's been up 65% of the time, but its average gain isn't all that great. As we go into June, it's only been up about 50% of the time, and it is one of the worst, or the worst month in terms of stock market performance. Right? It has been the worst month over the last 20 years, which is saying something because we had the Lehman crisis and all of that in September and October, right? So that's saying a lot. If we come into the past 10 years, you can see that May has actually been a lot worse than June on a percentage basis of performance, right? We're seeing a kind of a little shift there. And if we get into the last 5 years, right, we see June kind of worse than May. But, either way, when we have summertime dips, the one thing that's clear, and here we are the last 15 years, right? Summertime dips typically have July rips. July tends to be that kind of relief month for the market that, okay, boom, off we go, for the market. That tends to be the time. It's also the time where we start to get into some earnings, right? So that does help to drive things a little bit there. So or provide a little clarity within the summertime months. So, there's nothing where I look and go, well, this may sell off, boom, we're going to have a huge June rally. We could, right? We definitely could, but the seasonality, points a little bit more towards July. And let's face it, if you're a big bull and you have a lot of cash on the sideline, you're just saying, hey, you know what, market, keep going down, sell off, go. Price it all in. Let it happen. Price it all in, and then you kind of turn around in the end, kind of mid to end June, and say, all right, where do I want to go bottom pick, and really set yourself up in a pretty nice season to go out and take advantage of what is generally a bullish condition. Obviously, it's not all years, every year. It's just been what the trends are. Okay. So anyway, that's what is kind of on tap here for the market. I'm sure traders and all of that are going to be watching U.S. President Trump's Twitter account this weekend. I would not be surprised at all to see something market calming come out from U.S. President Trump this weekend to kind of encourage a gap up on Monday. That would not be surprising. That would not be out of the norm. Some of the biggest comments that he has made have come on Saturdays and Sundays, and where the market has had to adjust on the next open day, Monday, or when it's been a holiday, a Tuesday there. Okay, we do not have a lot of earnings on tap to really drive the market. We're going to have the front end month economic data next week that will kind of help there. But we know the story of the data. It's not like we're looking at the data and going, "Wow, this is going to tell a different story." If it does, yeah, the market will react. But, the data is what it is. And when you look at the data globally, it continues to show that there's global economic growth, but that growth is slowing and that growth is slow. And that story is not changing. Do we see signs of it changing next week? That would be either something very bullish or something very bearish, depending on which way it goes. But I don't expect that we'll see that. I don't expect that we'll see that. I expect that the market will continue to be left to its own devices to kind of trudge on through here with things. All right. All right. Well, thanks for hopping on. Have yourselves a fantastic weekend, and we'll see you back here on Monday, and hopefully, be able to take advantage of the next signals that come along. Have yourselves a great one. Goodbye.